Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
We are going to hear about a couple of service companies now from our strategists Ryan McQueenie and Nina Mishra. A couple of service companies providing two different types of services. Ryan, we'll start with you. You have an employment service company.
Yeah, so 2 weeks ago we celebrated the 9-year anniversary of what people call the generational bottom.
Oh.
And then throughout the
I must have missed that.
throughout the global kind of economic landscape, we have this really rare moment where there's really no developed country in the world that's in a recession right now. But we've also seen some remarkable volatility over the past week, with tepid trading really stretching over the past 2 months almost at this point. So in times like this, I want to stick with what we know, which is this global economic recovery. And I think one of the best ways to play this is with a staffing firm. And so my pick this week is staffing powerhouse Manpower Group.
Yep.
This is the third largest staffing firm in the world, and every year they employ millions of people across dozens of countries. Now, as you can see here in the price consensus EPS surprise chart, pretty solid trend, especially over the past 2 years. Shares really starting to gain momentum, pretty good earnings track record as well. And this is also a pretty solid value play. Shares trading at about 14 times forward 12-month earnings. That's a discount compared to the broader market and its industry. It's also a solid cash cow, which I think is a pretty good option in this kind of market. Generates about $8.50 in cash per share. Also very, very little debt. So a low leverage pick, which I think investors are really going to start to be interested in this rising rate environment. We're going to bounce over here to the snapshot report as well to look at the estimate trend. As you can see, analyst sentiment for the current fiscal year really improving. We're seeing 100% agreement on 6 positive revisions, really having a significant impact on the Zacks consensus estimate over the last 60 days. So when you pair the strong Zacks rank with the positive, led by the positive estimate trends, with all of the other really interesting both cash and value metrics, I think it's the perfect play in this kind of volatile market stretch that we've seen over the past couple weeks.
Okay. Nina, tax filing time coming up, deadline time right around the corner.
Yes.
So is that why you're looking at H&R Block?
Yeah, that reason, and also as Ryan mentioned, because of all this volatility, this stock is a play on the improving economy and tightening labor markets. So they reported their results earlier this month, which were better than expected. This was their fiscal third quarter. And due to seasonality of their business, this third quarter is usually a loss, results in a loss. So, but the loss this time was narrower than expected, and the revenues came ahead of the estimates. So if you go to detailed estimates page, you can see that analysts really like the results, and in fact, they had been increasing the estimates for this company even ahead of the results in anticipation of good results. And they also announced a strong start to the tax season. So that means the fiscal fourth quarter results should also be good. And another reason why I like this stock is that they have been returning a lot of cash to shareholders in the form of dividends and share buybacks.
Yeah.
They have been consistently paying dividends since their IPO in 1962. And last year they increased the dividend by 9%. And the dividend currently is very juicy at 3.8%. And the stock also looks good from industry and sector rank perspective. They are also, you can see that they are in the top 27% and top 44% respectively. It's a Zacks rank #1 stock, and the expected EPS growth rate for the next 3 to 5 years is 11%, and it is trading at a very reasonable valuation of 9.25 times forward earnings. And as I mentioned, that the economy is improving and the labor markets are also improving and tightening. So with improving jobs market, the number of tax filers is increasing, and that trend should continue. And H&R Block has a well-known brand.
Sure.
Both their channels in store as well as digital do-it-yourself are very well-known and popular with users. So I think the stock is worth a look.
All right, sounds good. Do either of you own either of these?
Yeah.
All right, thanks for that. Don't forget, more stock information always available on our website, Zacks.com. All you need to do is get to the home page to start looking through it. With Ryan and Nina, I'm Terry Ruffalo.